Hello, uh, everyone. So, welcome to Projack's weekly webinar. Today's 219 March 19th, and we're going to cover a lot of markets. All right. So, first of all, look at the DXY. If you remember, in my last webinar, I have already marked this very important structure as 96.80. If you remember, and I did said that if DXY breakdown of this level, right, basically means it will be bearish. And that's how we actually find here. You can see it from this candle, right? The price breakdown and pullback cannot goes further anymore, and now it's coming down, right? Of course, now DXY have some support near this level, okay, near 96.19, right? Because this will be a trend line support as well, okay? If you draw a trend line here, right? So in my view is we don't want to chase the price of short DXY when it is going to hit the support zone, right? So you're trying to find some place to buy, especially pay attention to this week's the FOMC meetings, right? So maybe there will be a bounce from here, okay, and we can catch a buy from here, right? So let's go to the Euro US dollar, right? Euro USD. Okay, the USD, in my last webinar, we said we want to sell. Okay, we basically sell from here, and we make a couple of money, right? We made a couple of this downside move. However, the balance of trade was hit either break even stop loss or hit stop loss, but that's okay. Now, what we found is that the euro is actually in this kind of a channel. Okay. This is a channel, and it implies the price may continue going up, and there is a structure here to give the euro some resistance from 1.1360, and now we can see some bearish price action here. Okay, so if you think that the euro cannot break up this level, okay, what you can do is you can try to short the euro from 1.1360, okay, and put your stop loss, okay, above this bar, okay, above this bar, right? This is always what we did, okay, because we place a stop loss above the breaking series of candles, right, above the origin here. So it's about 1.1386. Okay, you can maybe put it at 1.1390. All right, so it's about 40 pips stop loss, right? And we do hope that the euro can break down this channel, right? And are going to at least 618 pullback, which should be here. Okay, so we can actually find the two targets for the euro. Okay, the first is at 1.1290, second is at 1.1246. All right, so basically this is our risk, right? This is our risk, and we are going to win more than 2, okay, about 2.5, right? 2.5. So it's 1 to 2.5 risk ratio for the euro. Okay, so if you go to smaller time frame, we can just find out a very interesting patterns here. Okay, basically we measure from here, right? So we find 3 pings, okay, trying to close above 1.1359, but failed. And if you look at here, right, we can see that it's just a bearish move from 1.1360 to 1.1344, and in 30 minutes time, we can already find that the small channel was broken, right? It's just broken. So what you can do, guys, now, right, is to short the euro right now, okay? Okay, very lucky we found a first trade in our webinar. Sell euro USD now, okay? This is a structure or trend line or channel break down and pull back, all right? So we short from this neckline, right? This is a neckline. We are shorting exactly at the neckline. So we sell USD now. And our stop loss will not be going to be more than 1.1390, which is just based on this ping, okay? 3 ping bars is above 1.1362. Okay, so it's about just maybe 10 or 15 pips move. Okay, you can see here is breaking down and now it's pulling back, right? Good. So you can sell USD now just risking this about 15 pips, right? And it looks like we're going to have our target to at least for intraday, at least to 1.1327. Okay, so and still this is going to be a more than 1 to 2 risk reward trade. So if you want to join, just you can just take a trade now. All right. Anyone has already taken the trade? It's very nice breakdown and pullback, right? You see the price. See the price actions. Interesting, right? The structure. Wow, looks so nice. You see, right after I said we short, you see the price going down. Isn't it magic? Right? No, it's not a magic. Okay, it's just experience. Okay, it's just trading experience. We know that the structure was broken down and pulled back. Right? Very simple. So you just take a trade and enjoy the fall. All right. Okay. Good. I think you already have some profits, right? Yeah, small profits, but it's already start to winning money, right? Good. Okay. Let's go for sterling. All right, sterling was a very nice trade in last week. All right, I said we found that this ABCD pattern is already completed at 1.1360. This one I already published in my trading views database here. Okay, so we sold from 1.33 30. Okay, we captured the first 100 pips. Okay, and then just today, if you remember what I said in my WeChat group, I said the study we can still sell, right? We can sell from this structure, and now it's working nice. Okay, so anyone still holding sterling short trade? Anyone? I hope that you take a lot of money from this trade, right? Okay, so just hold your trade, okay, because we are going to see a next four coming soon, all right? So just take your short, hold your short, okay, all the way to 1.3120, right? Okay, basically, there will be the first target. The first target has already been approached. So now we are going to have the second target to 1.3120. Okay, then the third target will be at 1.2847. Right. Good. So another pairs you can consider is to short sterling yen. Right. Sterling yen is just looks the similar way, the same way as the sterling dollar does. Right. And 147.86 is structure here. Okay, this is a structure here, right? If you see nicely, it actually broken yesterday, right? Broken yesterday, and today is actually a pullback, right? And now is price is coming down as well. So we can also consider short sterling yen, right? It's also a very good trade. So sterling yen will have a my target will be at 145.73 to this place first, okay? Because these are the supporting zone here. Okay, so can short either sterling dollar or sterling yen. All right, sure. Let's check gold. Right, gold. Yes, you are right. Gold. We have a harmonic patterns here. I would not say it is a bad pattern because it actually the B point touched the 618. You can see here, right? So basically, you can just use the Fibonacci extension tools to measure the extension moves. All right. Very perfect. It hits the 1.272 and 1.41 for extension, right? So let's short gold right now, okay? You can short gold right now, and now you can see this already engulfing candles, right? Did you? Can we see this is actually engulfing candle, right? The price is coming down, right? So we can see that the 1311 was not broken, so we can start to sell the gold. Just similar like the euro, right? So we sell the gold, okay? Stop losses need to be placed above the previous high here, okay? At about 1311.90, okay? And then you are going to have these two targets, all right? 382 and the 618. Let's just measure it, okay? The first target will be at 1303.89. Second target will be at 1299.64. And if you are lucky enough to catch the third target, will be all the way to 1287. Okay, so you can consider short gold till here, till the neckline here. Okay, so these three targets, right? You can sell, right? And let's look into the big time frame. Right, we do an assumption that if the gold failed to break 1311.88, right, basically fail to touch our stop loss, what will the gold behave is it has this small channel just like the euro did, right? So if the gold can break down this channel, which means the more open downside room will be open. Okay, yeah, very nice. You already saw that at 1.272, right? Good, very good. Okay, so what we are expecting is for the gold to break down this wedge and all the way, okay, to 1290 or 1287. Okay, and then you can see there's bullish patterns here. Okay, the bullish pattern was a guarding pattern, so it actually has this very nice entry zone from 1 to 87, right? So what I'm thinking now is the gold is very likely to perform a bullish harmonic pattern, so it will have another downside move to cheat those investors to sell the gold, follow the trend, okay? However, if the gold cannot break down 1285, right, it will have a big upside move, okay? That's what I'm thinking. So it may even give you this kind of, harmonic combinations, right? But this one, the second one, we didn't see the C point yet, right? But we can consider if this pattern complete, right? Which means that you can buy from 1 to 87 and stop as below 1 to 79. You may have this very nice profit to enjoy the CD leg from this move, right? So that's we call combinations. Yeah, similar with silver. Yes, you're right. Similar with silver. Okay, so you can keep the sell from the gold of here. Okay, I'm thinking I think it's okay. You just need to put your stop loss above 1311.948. Okay, all right, good. So let's go for oil. Okay. Yesterday I said we can short the oil from here, and that was a stop loss trade because they actually break up the previous high for of this pink bar, right? So we encounter a loss for the oil, right? Of this this is a loss, right? But it's okay because after we stop loss, we exit the trade. You can see the price continue moves up another, 70 pips, right? So if you imagine that you never put a stop loss of this trade, you will suffer a big loss, right? And now what we can do is, okay, now we have to identify the new trade for the oil, okay, new trade for the oil. So let's draw the trend line here. You can see that has a very nice touch of 59.52, and there's another trend line looks like something like this. Okay, so now the oil is inside this rising wedge. Okay, what we can do is we can sell the pullback of here. Okay, 59.35. So go to 30-minute charts. It actually already break down and retested. Okay, you can see here this is a breakdown of the move here. Then the pullback candle is actually this candle, right? So 59.30 is a very strong resistance that we can rely on to sell the oil and put a stop loss above 59.60, right? So basically what you can do is to sell the pullback, okay? And the first target is the wedge. Second target will be out of the wedge will be more deep to maybe 58 or something like that, okay? Good. Right, because the oil has been rallied from 42 to 59. I think in weekly chart, it's already complete the structural test of here, this place. If you see the structure here, right? It just touched the previous structure of this neckline here. So we know that the oil in a long term is at a very strong resistance zone. Okay, so daily chart looks like, yeah, we have a pin bar of the daily pin bar. So you can also consider to sell the next day to confirm that this is a pin bar. Okay, but for smaller time frame, what we can do is we find a pullback to sell from 59.30. Okay, that will be a very good trade. Rely on this structure here. Any questions? So this the oil trade will be a very nice trade because the risk is really very small. You just need to risk about 40 pips, right? 59.60 to 59.30, yeah, 30 pips. So the stop loss will be only 30 pips for the oil, okay? But the weighing will be more than 100 or even 200, okay? I think the oil can drop until here first, 58.33. Then the second target will be the 57.50, okay? Will be here, okay? So the oil, we can consider sell the pullback. You get it? If you understand what I'm talking, I'm actually telling you how I actually made my trading plans and I share to you guys. So pay attention to the logic behind the trade. And if you understand, please give me 6. Okay, because we see this candle breaks down, right? So sell the pullback. We know that in the higher time frame, it is already at the weekly resistance, right? Good. So based on higher time frame, we know that it's at a weekly resistance, and in smaller time frame, we found the first downside move. So we decide to sell the pullback. All right. So this is our trade, right? And how many lots you should take is based on 30 pips stop loss. You should actually trade 0.66 lot for oil, right? To make sure that you only lose $200 for this trade if your capital is 10K, right? Okay, good. Let's go for Aussie. Okay, Aussie, we have just a very nice trade in last week webinar, right? If you remember, I said we want to buy from the neckline, right? If you remember last webinar, I said we want to buy the low, okay? We want to buy the low, and we want to aim to sell the high, okay? Where is the high? The high is at the 618 place, is here, about a 0.7124. Today, just almost touched, but not yet. Okay, so what you can do is you can take some profit of your Aussie, Aussie long, okay, and don't short it yet, okay, because you don't know whether the price will stop here at all. Okay, so just take some profit, right, and hold the rest. As long as it's still in an uptrend move, as long as it's still in this upside channel, all right, you just need to consider to buy the Aussie. Okay, buy the Aussie. Let's see whether it can break up to maybe 0.7133 or 0.7156. All right, good. Let's go for dollar yen. Okay, dollar yen has looks like it makes a very interesting pattern here. Okay, and it's actually also a neckline retracement. This is double top neckline pullback. Never pushed to previous high and coming down, and now it's pulling back again. Okay, now it's pulling back in, but the way that it goes, it just tells you that the 111.49 has very strong resistance. So you can look for price action to short dollar yen. Okay, look for price action to short. Okay, all right, good. Let's go to Canadian. Okay, Canadian has a very strong rally in before we made a webinar, and now it's come to 1.3263, and I'm thinking it may touch the 618 place here at 1.1320. Okay, so just remember this place. Okay, 1.3220 is a very nice place for you to watch the price section to consider to buy the US dollar Canadian. Okay, so are you do you understand what I'm talking? Okay, buy the low, right? Buy the low until it hits 1.3320, right? And then you see whether it can give you another bearish patterns to 1.3570, right? That would be a very nice trade for the Canadian. Okay, all right. So any more pairs? Any more pairs? We have touched the euro, the sterling yen, Aussie, Canadian, dollar yen. I think the only one that we missed is the what? The only one we missed for the oh yeah, S&P. Yes, you're right. And Kiwi dollar. Okay, let's go for Kiwi dollar. Okay, Kiwi dollar will be similar as Aussie. So Aussie going up, Kiwi also going up. And I said, my last webinar, we want to buy the pullback of the channel, right? But it didn't really pull back to this place. However, it has pulled back to the neckline here. Okay, so if you can rely on this neckline, you can also consider to, to buy the Aussie last time. Okay, now, sorry, buy the Kiwi from here. And now it's actually already facing the important structure here. So Kiwi dollar, if you think that it cannot break 0.69, you can also try to find place to short of Kiwi, right? Of the New Zealand dollar. All right, okay, let's go for S&P 500. Okay, S&P 500 in daily chart, it says already tested the previous neckline here at a 180, 1862. Okay, let's go for 1 hour chart. 1 hour chart, okay, just a similar patterns, all right? It's actually a move, strong move, and then the candle was static. Okay, the candle is not very, very volatile, and then a breakdown, now it's pulling back. So you can short S&P right now also. Stop loss is above previous high. Okay, good. So what else? What else? USD what? USD RUB. Okay, you're talking about the Russian currency, right? Okay, normally I don't suggest you guys to take this trade of this toxic pair. Okay, you can see the price is really high, 64.53. Basically means that 0.06 dollar move, okay, will give you a very almost 1%. Sorry, yeah, 1%. So it the for the Russian, I think this pattern works nicely, and there will be a bullish pattern of here as well. So yeah, you can consider short the dollar Russian currencies. Okay, short from 65 and then all the way to 58 or something like that. Okay, okay, Turkish lira. Let's see the Turkish lira. Okay, basically, yeah, have some support from 5.15, and now it's slowly climbing up. Okay, so yeah, so if you don't have any reason to trade these two pairs, you don't trade. Okay, focus on those G7 or G10 pairs. It's like will be better. Will be better. Okay, nice trade euro, right? Very good. Let's see what happened to the euro. I think, wow, guys, claps. Where's your clap? Yeah, we just founded the euro trade. I said sell the euro now, and now we see instant fall, right? We have instant money. Come on, instant money. Wow, it's just you know, you just earn some money by joining my webinar, right? Within a couple of minutes, just like within 10 minutes, is it? Or maybe 20 minutes time, because this is a 30 minutes chart, right? And I said, yeah, sell now, and now you have already 20 pips move. Good. Okay, also gold falling, right? Yeah, very nice. We sell the gold. Wow, good. Interesting. So do you feel good by trading with patterns? Do you feel that we are, in a sort of advantage if we have know the logic of the markets? We know that how the price behaves and where is the key point, where is the key price sections, right? Not good for you. You didn't follow it. It's okay. Next time, right? Yeah, you can check dollar Swiss franc. It's just similar to the euro dollar. Okay, dollar Swiss franc. You know that we have the supporting level is just here, so it has already been touched. All right, and now this is a downside move. Okay, so I will suggest you to consider to buy the breakout and the pullback. Okay, buy the breakout and pullback. Use the 618. It will be better, right? And you didn't follow it. You have to ask yourself why you didn't follow, right? You said you don't believe in this trading plan, or you don't like it, or you just your hand is too slow, right? So we know that sometimes we really to be fast. We really to move fast, okay? Because the price is not always there waiting for you to sell or buy, okay? Oh, too slow, right? Okay, maybe you should actually get ready to trade next time when you join the webinar, because I will be posting a lot of ideas for you guys. Okay. All right. S&P 500. So okay, just to remember, the highest resistance level is at a 2A62. Okay, 2A62. So we want to sell from 2A62. Okay, now it's still a bullish patterns. Not yet, not yet coming down. No bearish price action yet. So no short for S&P now until it hit 2A62. Okay. All right. So let's go to check some. Okay, Bitcoin, very nice. Last week I told you guys to buy, right? I said at least as long as 3,900 was, sustained, so the price will just move up. Okay, so we have a nice buy from the 3,900 level of Bitcoins. Okay, all right. So I think we have already covered a lot of markets. All right, look at the sterling yen. All right, falls very nice. We already have 20 pips move. Good. What else? Oh, Shanghai. Okay. Okay, for the Shanghai composite, okay, the China A shares is still a bullish move. Okay, now you can see the price is kind of consolidating within this box, right? So we can assume that, okay, a rally and a base, and the next rally may just show in the next few days. Okay, so after the consolidation, you have two results. It's either break down or break up, right? So I will think it will be a trend continuation trade. So find any pullbacks to 3,000 level to buy. Okay, now we can see the 3,000 level is supported. Okay, the resistance, okay, resistance is now becoming support, right? There are buyers from 2,960. Okay, Ripple, right? Let's go check Ripple. It will be just similar to Bitcoin, but Ripple just have a sideways move all the ways. So yeah, you can still consider to buy from 0.30. I think still okay to buy from here, and just waiting for the price to go up. But you have to make your choice. So which one you want to trade? You want to trade the XRP, or you want to trade the BTC, right? Okay. So any more questions? Okay, I will highlight this video. I really hope that you guys to watch it, especially when you are first time to my webinar. Okay, you just need to go to the youtube.com/Projack. Okay, and trying to watch the videos that comes in the first eyesight. Okay, because I have already describing what is a good trading system. Okay, so we have to know that you have to follow a system to trade to benefit from the earnings. Okay, so you have to watch this here. Okay, welcome gift to all new traders. Okay, watch this one. Watch this one. This is a special gift to all new traders. Strongly recommend new traders to learn. Okay, okay. So just watch this video, right? Let me just copy the link. Copy the link. Okay. All right. In this video, I have already told you guys what is a trading system and what are the key points we have to know. Okay. First of all, okay, we have to spot good quality, high quality trade, okay? High quality trade constantly, okay? This is the first criteria. If you can only spot one trading within 1 year, then you're not a good trader, right? Okay, you have to spot a lot of high quality trade constantly, okay, regularly, right? Two, what is the second? What is second criteria to, you know, to have a winning system? Anyone guess? The first one actually give you what? Give you the numbers of the trade that you make, right? So what is the second criteria to make sure that you are earning money instead of losing money? No, not money management. Is the second one is you should consider what? You consider your risk and reward. Okay, every time, every trade, okay, every trade you lose or you're risking how much? Okay, let's say, okay, to win how much? Okay, if you risk $100 just for $100, that is not trading, that's gambling, right? But if you risk only 100 in exchange to $200, okay, that's very good trade. Okay, so number 3 is about the winning ratio. Let me ask you guys, are you afraid that your trade went wrong? Are you afraid? A lot of new traders are so scared of the losing trade. You say, oh my God, I lose again. Oh my God, my money blown up. Okay, why? Because first of all, they don't know how to do the money management. They always all in or they trade too much, okay, much more than they can afford to, okay. But still, we are human beings. We don't want to have a losing trade, right? Nobody wants to have a losing trade. If you know that this trade is going to lose, I think that probably you won't going to trade, right? Are you? Yeah, just answer my questions. If I told you, okay, for example, just now the euro dollar trade, right? If I told you that, okay, guys, you can short the euro, but I can guarantee you, you'll be a lose. Are you still going to trade? Give me your answer. If I tell you this trade is definitely is doomed to be wrong, are you still going to open the trade or not? No, right? You won't, because we don't want to lose money for sure. Okay, that's common, that's okay. But in the trading world, okay, we have to face the losing trade. That's a thing a lot of people failed to face it. It's not about emotion, okay? It's about how you face the losing trade. When the trade going to be get stopped out, okay? What is your thought? What is your reactions? Are you feeling sad? Are you feeling that, oh my God, it's so nervous, it's so, it's just a nightmare, right? If you feel like this, I can tell that you are still scared of losing trade. Yeah, what James said is very correct, okay? It's part of the game because we are going to make money through all the winning trade and losing trade, okay? Okay, so winning ratio, I don't need you guys to be a very accurate, okay? No need to be on 90% or 80% or 70% or very high accuracy. Accurate, okay? No need, not necessary, because you know that no matter how hard you work, you still cannot guarantee the next trade is confirmed to be a winning trade. You cannot, because we are going to face the losing trade anyway. Okay, so the losing trade is not neglectable. Okay, why don't we just face it in the front, okay? Losing trade. You have to tell yourself, okay, I can accept losing trade, and I also expect that I have a lot of winning trade. And my trading system has already determined that my winning trade will always be 2 times greater than my losing trade, right? So in the long end, am I going to make money or losing money? Do you agree? So you have to think very carefully, because losing trade means, okay, you take a risk to enjoy the reward of 2 times of the loss, right? Am I right? So every time we are taking the risk to enjoy at least 2 times of the loss, and that's what we benefit from it, okay? Because if your trading result, it looks like this, okay? Minus 200, the first trade lose, second trade also lose, third trade win, fourth trade win, then you minus maybe 3 times, and you 400 and minus, okay? If your result is like this, tell me, are you going to losing money or winning money? Okay, AB said, managing live trades are difficult. Most of my trades go positive. Hits break even before hitting target. All right. If your trade hits break even too many, okay, a lot of times hitting break even stop loss before going to target, what you should do is, okay, you don't put your stop loss to move your stop loss to break even so fast. Okay, make sure that you take some profit when it hits 1 to 2, and then you're going to take the stop loss to break even. You don't push the stop loss to break even too fast, because if the faster you put it, okay, the more easier, okay, you will be shaken out. All right. And the live trade is not difficult to manage, because you don't actually put or take it too nervous to place a live trade. It's just still the same trading plan that we are talking all the time. Okay, all you need to do is to use the ESP rules. Okay, just ask yourself, are you ready to take the trade? Then you have to ask yourself 3 questions. Okay, where is my entry, and why do I buy or sell? Why I'm shorting instead of longing. Okay, then where is my target? Okay, where is my stop loss? Okay, all you need to do, and how many lot size? What is the lot size? Okay, for the trade, and how much money I'm risking? 200, 300. Okay, 400, or maybe 2% of capital, maybe. Okay, so these are the checklist for every single trade you did in the future. Okay, so if you cannot find your entry, if you cannot find your target, cannot find your stop loss, then don't trade, because you don't have a trading plans. Okay, a trading plan is actually a very nice tool for you to trade it without emotion. Okay, a lot of traders are so emotional because they don't have a trading plan. They just randomly buy and sell, and they're just looking at the profits or the losses, floating losses, right? And they are, not performing very well. Okay, but for professional traders, okay, we are okay to accept those losers, those losing trade, because we know that, okay, the more we trade, okay, the large number, the law of large numbers will apply. Okay, we definitely will have a lot of a winning trade and a lot of a losing trade, but okay, since our risk reward ratio is good, we are still going to make money. All right. Okay, so AB, take my advice. Okay, you have to go back to check ask yourself, do you have rules of putting stop loss to break even, right? In my rule, okay, I only take stop loss to break even when my, the 1 to 2 risk reward ratio was hit. Then I start to put the stop loss to break even. All right. Okay. So this is the third thing. So, okay, winning ratio. You have to understand you are not going to be 100% right. We definitely will encounter a lot of losing trades. So when losing trade appears or occurs, okay, don't be frustrated. Don't be frustrated. It's common, okay, but we have already reduced the damage to what we can afford to, right? So no need to be fear of the losing trade, because the losers and the winners will come anyway, and you just keep going, keep it going, right? Okay, good. So yeah, I think end of our webinar tonight. Okay. Oh, you see the euro. Oh, it's pulling back again, right? So it actually touched the 618, if I'm not wrong. Yeah, just touched the 618. Okay. So for those guys who learned my course, you know that the 618 have some support, right? Okay. So take some profit, and then you can sell again. Okay. We may sell again for euro, right? If you already take some profit. Okay, just sold it again, because you can consider this bullish candle a pullback. It's actually a pullback. Okay, still can short, or maybe you can sell it once more, just like the songs yesterday once more, right? So it's actually a shorting euro trade once more. Okay, so thank you guys for coming, and uh, I will be flying to Guangzhou this Thursday, and we'll come back to Shanghai this weekend to conduct a course, and then the next week I may going back to Singapore. So uh, when I think next week I'm still going to make a webinar, maybe in Tuesday, okay, not Monday, because Monday I have plans. So the next webinar, tentatively, I will host on next Tuesday. All right, so just get ready. All right, okay, good. So yeah, that's all for today. Thanks for coming, and enjoy your trade. Okay, find your trading plans. Okay, plan your trade and trade your plan. Okay, don't be frustrated, right? Just to keep the rules simple. Okay, you only trade with patterns. Okay, structure breakup and pullback. Okay, 618, Fibonacci extensions, harmonic patterns, ABCDs, Gartley, bat, butterfly, cipher, blah 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 blah. Okay, just to trade when you see the pattern. So trade what you see. Okay, trade what you see is very important. 30 minutes before the next webinar. Okay, normally the webinar will be hosted on 10 p.m. Singapore time. Okay, so I have already mentioned in my group, right? But in my Facebook group, I will be posting maybe 10 or 15 minutes before that. All right. So anyway, if you're not able to comment as a live webinar, okay, you can watch the recordings. Okay, you can consider watching the recording. I will post the recordings to YouTube. Yeah, the WeChat group I have already made a remind this afternoon, or this in daytime. Yeah, in daytime. All right, see you next time. Bye bye. Good luck.